Welcome to Beyond Profile. Today is November 22nd. Happy Thanksgiving to everyone. For our weekly update on the markets, yesterday we gapped down in the marketplace due to the super committee not coming through with any sort of a resolution, and again on the back of some more European woes and the contagion fear that's over there. You can see clearly what's happened here now in our S&P market. We basically have pulled back into this larger balance area that we had going on since the month of August started, when we first sold off the new highs. So if we look at this range here, this is the prior balance area. Actually, we take it back to here. There was an acceptance of value in the larger time frame. When we probed underneath it to the downside, there was no follow through, and then we knew we were going to new highs at that point. This P formation, because it almost looks like we had a new stage 3 building above this prior balance area, we are now failing and coming back into it. Immediately, a couple areas that stick out at me here is obviously if you took a composite of these volume profiles, 1157 right here is the highest volume node for this composite. You'll notice what else is over here. See the gap fill? Okay, technical gap fill is like 1156. So that's a big area. That's one of my first areas for this market to come back and come back into here if this continues to drop. We're trying to hold on this little bitty shelf here where you can see we had 1, 2, 3, 4, 5, 6, 7 days of balanced trade here. After that vertical move, we had acceptance, and we're kind of at the bottom end of that, if you will, at this point. But below this, see ya, there's not a lot, right? There's a lot of room all the way down to 1157s, which could be another 30 plus points here for the ES market. And in the overnight, we really haven't traded that much at all. I want to show you the NASDAQ too, because this one's gotten really beat up a little bit more. And actually, the S&P, what I want you to focus in on here is notice where the ES is in relationship to the gap fill. All right, you can see we're still not there. Now let's look at the NASDAQ chart. All right, here you go. Here's the NASDAQ daily. Again, clearly broke the base last week. Wide range candle down underneath that pivot low. You can see where we had that marked off. So we broke through. There was no sort of a probe and reversal. This completely gave way to a failure of the prior balance here that we had up on the top side here. Here's the gap. We did a technical gap fill yesterday on the NASDAQ. Actually extended a little bit further down below that, and then on the daily composite, if we composite all of this here, 2194 was the big number here, and you can see that we probed it a little bit, closed with a big bottoming tail, and but the same thing applies here. That is, if the NASDAQ doesn't hold this 2194 area here on the composite high volume node, this really is looking at like all the way back down to the rotation, because when you look to the left here, there's nothing. It was a clean V pivot reversal, so there's not a lot of demand in there anywhere. This thing can come right straight back down all the way to the bottom. So really what you want to see over the next few days here is that 2194 on the composite, the high volume area of these profiles, would be a stopping point or an anchor point, if you will, for price to find some support in this area and begin to hold. As a matter of fact, today what we're going to be watching for is that yesterday's value area low was 93 1/4, point of control is 97 1/4. So when we come down into that area this morning, we're going to look for price to hold, and we're going to look to to play the rotation inside of yesterday's value area. So we'll be watching, especially on the NASDAQ today, the 94 area to hold here to see if we can get any demand coming into this market. If not, it's clean, straight back down all the way to where we started at the beginning of August, or mid-August and September, and then once again back in October here, clean, throw right straight back down. All right, markets again. We had VIX back up in the mid-30s, and volatility's here. They're saying it's going to continue to be here as long as we have all of these economic woes in all of these other countries. Things will continue to be very volatile. Very good for us as day traders, because there's a lot of opportunity when we have that. It's when we start getting into really good times, and the market range narrows up a little bit, and the volatility is not as high as it has been in the last few months. It makes things a little bit more challenging because you don't get the range on a daily basis like we have. We've been accustomed to it now on these markets where we get cooked to the downside or the upside. You see some really nice reversals. So today would be day number what? 1, 2, 3, 5. Day number 5 down for the NAS. But I think today or tomorrow, we should see an update going into Turkey Day on Thursday here. And remember, the markets are closed Thursday. Europe's open on Thursday, which kind of adds a little spin on things just because of what's been going on over there. All right, folks, have a good, happy Thanksgiving, and we'll see you in the trading room.